Hello and welcome to the day ahead. It is Friday, July the 8th. I'm Andrew Gagan. Well, to the markets overnight, and Wall Street rallied with the S&P 500 and Nasdaq finishing higher for the fourth consecutive session as fears over the Fed's aggressive rate hikes eased. The central bank indicated interest rate hikes could be tempered if growth suffered. Energy stocks were the best performers as oil and gas companies followed the rebound in crude prices from the previous day's 12-week low, with utilities the only sector to finish in the red for the S&P. Stocks specifically, Tesla and Google's parent Alphabet rose as tech companies big and small benefited from positive investor sentiment. Affirm Holdings and Avalara, gaining 17% and 16% respectively. And the Philadelphia Semiconductor Index climbing on news South Korea's Samsung Electronics turned in its best second quarter profit since 2018, driven by strong sales of memory chips. Well, the US trade deficit narrowed 1.3% in May to a 5-month low of $85.5 billion as export increased 1.2% to a record high. Economists have estimated that the shrinking trade deficit could add at least 1 percentage point to economic growth and perhaps help avoid another quarterly contraction. Forecasts for second quarter GDP range from an annualised rate of negative 1.9 to 1% growth. Well, the number of Americans filing new claims for unemployment benefits unexpectedly rose last week, with layoffs surging to a 16-month high. Initial unemployment claims increasing 4,000 to a seasonally adjusted 235,000 for the week, sparking concerns about the health of the labour market. And data from recruiting firm Challenger showed the number of retrenchments surged 57% to more than 32,000 in June, the highest since February 2021. Meanwhile, St. Louis Fed President James Bullard said he sees a good chance the Fed will engineer a soft landing for the economy. And Christopher Waller there also saying he's doing what we can to support another 75 basis point in July, probably 50 in September. In Treasury yields, they climbed, the curve remaining inverted, the 10-year near 3% and the 2-year just over 3%. Major currencies were mixed against the US dollar, the Aussie rising to 68.2 US cents. And the British pound, that was up slightly. This as Prime Minister Boris Johnson announced he would quit, having lost the support of his government. However, he's expected to remain caretaker leader until September, when the party will choose his successor. And close attention will be paid on to China as it considers $220 billion worth of stimulus. China's Ministry of Finance is contemplating allowing local governments to sell 1.5 trillion yuan of special bonds in the second half of this year to boost infrastructure funding in an effort to support the faltering economy. Well, the Australian share market is expected to open strongly this morning, with ASX futures currently up 0.75%. Global oil prices arrested recent falls as traders switched their focus from demand to near-term supply shortages. Brent crude rising 4% to $104 a barrel. The oil market's also bracing for supply disruptions at the Caspian Pipeline Consortium, which has been directed by Moscow to suspend activity for 30 days. And adding to supply woes, the US has tightened sanctions on OPEC producer Iran. The iron ore futures price, that strengthened to 1.6%. And base metals, they were mixed. Copper reversing its losses to rise 4%, while gold edged higher. And the crypto complex rallied, with Bitcoin pushing above 21,000 US dollars. That is your day ahead. We'll see you again on Monday.